Patriot Radio News Hour, Joe and Jason on this Wednesday. Happy hump day out there. Oh, man, what a crazy time it's been. February almost over. I mean, the first 2 months of this year have absolutely just flown by. I mean, we got so much going on in the world, and I don't know, man. We'll see how all of this is going to work out next week. Got big tariff week next week, according to Donald Trump. Last night, we did get a budget through the House. Now, that doesn't mean, you still got to go through the Senate. I'll update you on that, but it looks like another one of these big jump in debt type budgets. We'll watch it. We'll go over all of that and try to guess what's ahead as everyone's kind of a little bit on edge. Right. What's next for the economy? What's going to happen? Are we going to go into a recession? How quickly things change. Now they're talking about the end of quantitative tightening and 2 rate cuts back on the table again. And when we talk about gold, let's face it, the more they think they need to cut rates, the higher gold goes. And then on the other side, we want to cut rates, but we can't cut rates because inflation's too high. Oh, yeah, that's right. Really good for gold as well. Our toll-free number, 800-951-0592. The website at allamericangold.com. And, yesterday we had a profit-taking sell-off in gold. Today, I really liked it today because they touched the lows from yesterday, bounced right off gold. Gold's higher, strongly above that 2,900, and we now may have a new higher low. We did hear from the Treasury Secretary, Scott Bessent, and what he is seeing and saying that the economy is more fragile under the surface than what economic metrics suggest. So he's saying, listen, the headline economic numbers are a little more rosy than what the underlying economic system is, and he's vowing to what he says re-privatize growth. So this is one of these things, right, where, hey, we're for less government, but we're going to have to re-privatize the growth of the economy. Boy, that's going to be interesting how they're going to be able to do that. He didn't give really any suggestion as to how they're going to re-privatize the growth, but did blame overspending for the sticky inflation, over-reliance on what he called excessive government spending. Of course, you got to remember, U.S. GDP last, 2024 was 2.8%. I mean, 2023 was 2.9. So, Jason, it's interesting, but at the same time, when we saw the budget that got through the House, I don't know that the word sounded good, right? Let's not, hey, that sounds good. Right? Hey, we want less government, and we want to prioritize or reprioritize private spending instead of government spending. But then when we got the budget that passed through the House last night, yes, there were cuts to the budget. That part was true. Well, they put it in there. They actually haven't done it, but they said we're going to do it, and they're starting to do it. There are cuts happening. But then they spent hundreds of billions more than what they were cutting. So I don't know that these two statements, they don't quite jive.
Yeah, if they would just simplify it, which of course they can't, here's the big gob of money that we're spending, and here's the amount of money that we're cutting from that pile of money, then it would be, absolute. But what they do, it was just as you explained. Well, if we're cutting from these certain programs, or cuts, but if we're adding a big pile of money to it, I read some stuff about that from David Stockman, where he said, this is, I think over 6, 8, 10 years, it's a $6 trillion raise in expenses is what this GOP bill is looking like. Right. $6 trillion more is what it looks like over years.
More, right? Yeah, it's not $6 trillion. It's $6 trillion more than what they were already expecting. Which, when you think about that, something Jason and I talk a lot about. Listen, this is just every 10 years they seem to double the debt, and it doesn't matter how big it is, right? So when we're talking about 2035, we're sitting there saying, hey, we're going to be lucky if it's only $70 trillion. I mean, and this is kind of what it looks like. 800-951-0592. That's our toll-free number. Got a conclusion of a sale from yesterday. We got a few things left. Let's just say we had 4 items yesterday. 2 of them sold out. We got 2 left that we'll get to today. We'll see what else comes our way. allamericangold.com is the website. And like I said, the budget passed, listen to this, 217 to 215. So Donald Trump had to get on the phone and get a couple of Republicans that were going to vote no to vote yes. But it did pass. 1.5 trillion is what they call the floor for spending cuts. Yeah. By the way, the final target, 2 trillion. Okay. The problem is they're going to spend a whole lot more than that. We'll be back after the break. 800-951-0592. Quick look in here. So the Dow up 170 right now. They did break their losing streak. The S&P and the NASDAQ did not yesterday. Think they will today. The S&P's up 50. The NASDAQ's up 250. We've got NVIDIA coming. So they're let's just say this. Let's hope that NVIDIA just blows everything out of the water because, again, it's got to be perfect. Good won't be enough. And then tomorrow's going to be jobless claims. That's going to be an interesting number. Are we going to finally start seeing some of these job cuts in D.C. Materializing? And really, last week was the first real week where a lot of people have been actually fired. There's been a lot of talk about firing people. And, of course, there was court challenges, all of this stuff. So last week, there was over 10,000 firings just last week alone. So we'll see how that looks. If we get, let's just say we get a number closer to, 240, 250,000, that could facilitate something. Right now, here I hate to say it, but the higher the number, I think the better Wall Street will react. Why? Because they want rate cuts. They feel like they've got to have rate cuts in this. Crude oil hanging around $69. The 10-year note unchanged at 4.3%. A little bit of good news. These lesser dated auctions, 2-year, 5-year, they've been good this week. Now we got the harder stuff coming the rest of this week, but at least we had a couple of, what I'll call good auctions that we haven't seen in a while. Right now, depending on where you look, gold's either flat or up $10, but $29.14 on gold. Silver's higher as well today, $31.82. And again, I'm just telling you, be diversified, be smart, understand everything is priced to perfection. And perfection, as you all know, listen, perfection's hard to come by. And with all of the things that the Trump administration has to try to pull off, it just makes it less and less likely. I mean, it's extremely unlikely. That's why we keep telling you, be smart here, get more diversified. You got big IRAs, call us, take some of that, put it into a gold and silver or precious metals IRA. Understand the path. Let me break it down here. Maybe this will help. Maybe it won't. I don't know. So what passed the House? You know, Trump wanted, I want one big bill, right? Forget about this piecemeal. And you know, it's kind of funny as we're coming up on March. We'll be 6 months into the federal budget year 2025. Because remember, the federal budget starts in October. They don't follow the calendar. And we don't have a budget. But yet somehow we keep spending more money. Now, right now, we don't even know how much, right? Because we're in emergency measures. But here's what the resolution states. $1.5 trillion floor for spending cuts. They have a target of $2 trillion, as well as a $4.5 trillion ceiling on the deficit impact of any GOP plan to extend the Trump tax cuts. Now, boy, what does that mean? All that means is we want to extend the Trump tax cuts. And it's only going to count $4.5 trillion, right? That's, you know, how can they make that sure of that? Well, they'll make the numbers make sure of that. Let's get to the heart of it. They're already admitting $300 billion in additional spending on the border and defense. So I guess Trump's not going to cut the defense budget in half, as well as they want a $4 trillion increase in the debt ceiling. So that will get them, and I'm going to guess, I'm going to round it here, probably maybe May of next year, June of next year at the most. But when we look at what all of this entails, Jason, every year, the first year, year one, on the rosiest of assumptions. And by the way, this was Thomas Massey. He is one of those that actually wants to cut the budget. He goes, we're going to add $328 billion to the deficit this year. Now, some of that's already happened, right? Because we're going to be 6 months in. But that's a lot of spending. Now, we had a deficit of $2 trillion. So, now we're at $2.3 trillion. Of course, the interest expense going to shoot way up. I mean, we're talking about deficits near $3 trillion. And then he says, but he goes, we're going to add $295 billion the year after that, and $242 billion to the deficit after that. So I'm like, okay, wait a minute, 3, 6, $850 billion added to the debt in the next 3 years, on top of what we're already doing. So that will put our annual deficits at over $3 trillion a year. And he's like, I'm not going to vote for that. Why would I vote for that? Right? That doesn't add up. And what made him really upset, he goes, this is perfection. Right? This is what he called it, the rosiest of scenarios. And we know how the government operates. Jason, this is a guarantee, guys. I don't know that this will get through the Senate. I don't know. But know this, whatever it is, we're going to be adding hundreds of billions of dollars to the deficits every single year on top of what the interest is going to do. And when we sit here and talk about $3 and $4 trillion, they want a increase in the debt to $4 trillion. That only gets you, I don't know, a year and a half, year and a quarter. I mean, right? I mean, by the end of the Trump presidency, it is very possible that you can see annualized $4 trillion deficits. This is why gold's going so high. I know, it's tariffs, and look at all this demand. Why do you think there's all this demand? Right? Well, you guys are sitting on the side. I get it. Like, wait. I was excited. Wait. I don't know. What's going to happen here? How good is the economy going to be? Can we actually do it? You know what the big guys are doing? You guys are so far behind. Right? You're so far behind. And by the way, this is terrible. Okay? And it's still no worse than what Japan's got to do, what South Korea's got to do, what China's got to do, what England's got to do, what Europe's got to do. Right, Jason? This is why they're all doing it, because this is something where, hey, this is going on globally. Everybody's doing the same thing. You better have things that are real, because I'm going to tell you right now, we're not going to get perfection. Get ready for a major correction when it comes to debt markets. And I don't know. I'm back on. I think the Fed will cut rates. Inflation be damned. And just understand that the biggest piece of why they say the deficit's only going to add another $300 billion is because they expect to raise hundreds of billions of dollars from tariffs. So when Donald Trump the other day said, oh, no, we're on schedule, Jason, he meant it. It's coming.
Joe, we mentioned it yesterday, but some entity took possession of gold, and Joe, the number was 11%. The amount of gold that was taken possession by this one customer was about 11% of what the entire gold holdings reported of the United States is.
Yeah.
So it was 8,000 tons, whatever it is. Somebody took delivery of contracts of 11% of that entire amount. Now, some people are saying, well, okay, well, this is them filling up Fort Knox for an audit and all this other. You have everybody speculate, but nobody knows who it is. And what if it's not? What if it's not the United States government trying to show that they have gold? Because really, the United States doesn't own that gold anyways. They don't really have to show that they own anything because it was bankrupted out. Who is it that's doing this? And this is going on all over the world. And, Joe, then we also talked about how all of this gold is the gold that's being produced and being sent, especially out of London, it's all being sent to America right now for January, and it looks like for February, almost all of it is being, what is physically available to be shipped is going to the United States in January, and now it looks like also February. So if China only got 0.2, of a ton of gold for January, that's not what they're usually getting, Joe. They usually get a lot more gold coming out. So China didn't have enough gold for their own physical market. Our physical market's a little sluggish. Their physical market's out of control right now. There are people waiting in line for 6 hours to buy gold. That means China's reported amount of gold is probably a lot lower because somebody has to feed that market. Somebody is feeding the Chinese market with not enough gold to satisfy the customers. I'll tell you right now, if the Chinese population is told we don't have enough gold to serve you, the whole world economically, we could actually have a market meltdown worldwide because of gold. I never even thought I'd even think of that, Joe. It didn't seem like, I understand gold's importance with money, but in this modern debt-minded world, I didn't think that gold would actually even be, so nobody even whisper the fact that we could have an economic worldwide meltdown because of gold. I'll tell you right there, gold $10,000 suddenly becomes this like real thing, Joe. It actually becomes a real thing. You don't usually, Joe and I don't really talk about 10,000 gold, do we, Joe? It just seems preposterous. But now we're looking at things that it seems possible now.
Yeah, 3,000 it's a psychological thing, and it's really only psychological to paper guys. They just want to create ways to make some money, right? Like the sell-off that we've seen in gold, $40, $50 at least once a week. That's just, hey, we're making money, and then we're going to rebuy it. We're going to run it back up, right? We're going to make money, and every time we get a little higher high, we get a little higher low. But what Jason is talking about, think about what we talked about in the North American ETFs. In a single week, 48 metric tons in a week. You think about what happened in a month. Well, they may have taken 200 metric tons in a single month. It's unprecedented what is happening, and the problem is we have a stampede into these physical markets where the buying is, think about a delivery bar of 400 ounces of gold, just, gold's $2,915, 1.16 million for a single bar. And that's only, a bar's 400 ounces, and they're buying them at 32,150 ounces. 800-951-0592, Patriot Radio News Hour. Today's specials, yesterday we had this huge gold and some silver that we ran on it. The Morgan dollars are sold out. The $20 gold pieces sold out. I've got 8 $10 Liberties at $1,400. I mean, just to kind of, 2 10s, that'd be $2,800, right? Gold's $2,915. $115 below spot. And then I've got 18 $5 lips. They're at $710. So that'd be what, $2,840? I mean, $75 below the spot price. This is well below cost for these items. Yesterday, you guys, it's so funny because I'm like, God, our customers are really smart, and everyone's like, Joe, thank you for helping us, and we appreciate you guiding us along. And yesterday, I said, if it was me, I'm buying the 5s first, then the 10s, then the 20s. And Jason, they did the exact opposite. They all bought the 20s. I mean, granted, the 20s were $27.95, but I mean, these are giveaway prices. And like I said, I've only got 8 10s at $1,400, and I've got 18 5s at $710 at 800-951-0592. And when you think about what is the problem here, it's dead. It's dead. And we had 2 choices. Grow our way out or face a major recession. We may end up in a major recession on our way to trying to grow our way out right now. That's kind of what it looks like, doesn't it? Because you can't just go out and think about what they're trying to pull off here. They really want to increase spending by like $1 trillion, right? I mean, a year. But they got to cut, so because we can't do that, right? So we got to cut government to get there to make it so on the most rosiest scenario, the debt only goes up another $300 billion. Logic tells me will end up short on the cuts and way over on the rosy expectations. And I don't be surprised. Are we going to go up $500 billion a year? It's very likely. And again, I think this is what is driving these markets. Let me give you an idea. Let me give you a better idea of what just the North American ETFs did just last week. Okay, how much physical? Now you remember, they only put 1/10 of an ounce aside for every ounce that they control. 400-ounce delivery bars in a single week. 3,858 delivery bars were taken by the North American ETF. So that means they're controlling, 38,580 delivery bars, right? You know, when you're like, when you sit there and you say, wait a minute, that's 1.543 million ounces. And you're like, okay, well, let's just say $2,900. Jason, you're talking about billions of dollars in a single week going to one of the entities. And when we look at what's happening over the course of these months, it is very, very clear that major players are getting out of fiat money. And it's not just dollars. Okay, I don't want to just say, oh, well, they're getting rid of just U.S. I know they're getting rid of all of it. They're getting rid of all of it. Be your own central bank. And just understand that this is something where they're not buying it because they think gold's going to 3,000. It's not why. You know, Jason said $10,000. I hate to say it, but, and I'm not saying $10,000 this year, but could we see $10,000 in 2030, 2035? Yeah. We may have to. We may have to make any sense of these numbers that are so ridiculously unpayable. Let me give you this. New home sales. We're down almost 11% month over month in January. How can you have home sales down that much in January? December was Christmas. Right? I mean, come on. How bad is it? By the way, new home sales down from last year. The median price, it's incredible, surged $446,000. You know what it was last month? $415,000. Of course, what does that tell you? It tells you that nobody, number one, it tells you that they can't build any cheap houses. And number two, Jason, it's like it's a rich people only market now when it comes to housing.
That's what inflation does. You know, there's a lot of things that suddenly become less affordable for the average guy. But a starter
home now, $450,000.
Before 1913, before the Federal Reserve was put into place, the vast majority, talking 80, 90% of people in this country own their home. After the Federal Reserve, and you go a few more decades in, there's still people that own their homes outright, Joe, but it's 10%, 20%. It's except for institutional buyers, right? The average homeowner has a mortgage. Now we're getting so far down that people can't afford the mortgage, Joe.
800-951-0592. We'll be back after the break. 800-951-0592. We got 3 lines open, only 1 line full right now. This is an opportunity that we're probably not going to see. Let me just lay it out. We got however many tents, we only had 8. Tomorrow they're going to be $1,575, which is still a great price. But they're $1,400. If that's $175 off, and it's like $350 off an ounce. $5 Liberties. I had 18 of them. They're $710. Tomorrow they're going to be $800, and that's assuming gold doesn't go higher than $29.15 right now. But that is $90 off, or $360 savings if you bought 4 of them. Bought an ounce of gold today. And Jason, that's what we're talking about when we are buying. You want to buy. Hey, I want to buy as close to spot as possible. Right? That's what we always say. We're talking about buying way under spot right now. This is something, and I know I get it. Some of you are like, gosh, I'm just tapped out right now. I get that. But man, if you can afford to get a few of these coins put away, you're not going to get a better value. And by the way, I'll say this. Premiums went up again today. Don't forget this. They've been rising for the last almost 3 weeks now. 800-951-0592. Here's something new out of the FDIC, and it's not a good new. We really haven't talked about banking problems. They've kind of covered up the commercial real estate problem. Now we're seeing bigger and bigger defaults. Somebody wrote that the Hooters is going to file bankruptcy, that even the bonds that were bankruptcy protected are going to be wiped out. I don't know how that works. But the FDIC, so every quarter they tell us, hey, here's the number of banks that are in trouble. The latest was 66. Hey, there's 66 banks in trouble. Now, they're still telling us the amount of banks that are in trouble. But you know what they're not telling us anymore? The assets of those banks. And here's why I think it's important. Who cares if there's 66 banks that are in trouble, if they're all tiny little banks, right? Who cares? Yeah, they've got whatever, $20 billion in assets. Who cares? They've always told us the assets. And, of course, the problem is they're not telling us how big these unrealized losses are, and they're letting banks kind of, we're just going to hold these to maturity, and therefore we don't have to take the losses. And banks rarely hold anything to maturity, so just say it. But to take away the assets, why would you do that? Why would you decide, hey, let's stop telling? It's bad enough that they say there's 66 banks that are in trouble, and they won't tell us what those banks are. right? Wouldn't that be nice to know if you were one of the, hey, wait a minute, I bank at one of those banks. Maybe I should go somewhere else. No. They don't want you to know that. Why? Because they don't want you to go somewhere else. That's literally why. Think about it. Oh, you may cause a bank run. We don't want that. If we tell you the bank's in trouble, you're probably going to pull your money, and then they definitely are going to go out of business. But now they're saying we're not going to tell you how much assets are involved, which only leads me to believe, Jason, that there's going to be some banks with some really big assets that are going to make this list. And if we put the assets on there, now we may still not know what these banks are, who they are. But all of a sudden, if you're like, well, we got, 75 banks now in trouble, but yet the assets go skyrocketing, right? Hey, instead of $20 billion, it went from $20 billion to $200 billion. Right? And there's only now, people would figure out, it's not Joe Schmuckatelli Bank that's in trouble here. That's the only reason why you would stop doing this, Jason. And I think it's interesting. It's a great time to really, so much stuff going on, and Trump this and Musk that, and, everybody crying on the news and all of this stuff. Nobody's even paying attention here. And I'm wondering who it is that the FDIC is trying to protect by no longer disclosing the amount of assets these troubled banks have at risk. Yeah, think about it. 800-951-0592. Patriot Radio News Hour. Final segment on this Wednesday. 800-951-0592. Sometimes I think, is this not working? Is my mic not working? Are you guys really that, shell-shocked that you don't see the value in buying gold this far below cost, this far below spot? I don't know. It's crazy. We should be sold. We should have been sold out of these yesterday. But I still got some 10s at $1,400. And I got some 5s at $710. Listen, all you got to do, call the number 800-951-0592 and just tell the girls, hey, I want the special. Today they'll say, hey, which one do you want? I want the 10s. I want the 5s. I want some of each. It's just that simple. That's all you got to do. We'll total it up. We'll ask you if you want, like, if you're in Phoenix, we've got these sitting here. You can come in right now and get them. Colorado, we'll ship them up to Jason. Obviously, it's Wednesday, so early next week, you go in and you pick it up. If you don't, I don't live in Arizona or Colorado, or you know what, I live far. I don't want to drive. We charge a flat $35 and we ship FedEx. Well, what happens, Joe, if gold goes up $100 tomorrow? Nothing. What happens if it goes down $100 tomorrow? Nothing. You're locked in. We're locked in. It's just that simple. 800-951-0592, Jason.
Four of those $5 liberties, I'm doing the numbers, is only about $25 above melt. So $5 liberties, 4 of them, and it's only $25 above melt. You can, if you had a smelter, you can melt these down, and you'd only be out $25 if you turned it into a bar. Pull the copper out. These gold coins we sell, the pre-33 gold, they're about 10% copper. They're 90% gold. So, and they're slightly less than an ounce of gold.
96.75. Yeah.
Yes.
Ounces.
Yeah. So 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 even with the $10 liberties, you're even closer to melt. So it's I think you might be below melt on the 10s. So the 10s and the 5s are.
I'll tell you right now. Let's just look.
It's gonna be really close because I got it at an ounce of pre-33 gold at melt is about 28.15. That's what I got for the ounce.
Yeah, 28 right now. 28.18. 28.
There you go.
18. So you're below melt on the 10s, and you got $22. And of course you got to divide that by 4. You're like $5 over melt on a $10 or on a $5 gold piece.
$5.
800-951-0592. We'll sit here and see. Right now the Dow's only up 90. It's all about NVIDIA after the bell today. Everyone, fingers crossed. I hope they knock it out of the park. If it's one of these good but not greats, it's going to be trouble. We did get TJ Maxx today. Well, guess what? It was good. Not great. TJ Maxx saying sales are softening, and they're one of the good retailers. By the way, we heard from Lowe's and Home Depot. You know what they said? Sales are going to rise maybe 1%. Uh-oh. Yeah. 800-951-0592. Jason and I. We got an exciting half-empty cup. Am I going to have to eat a little crow today?